that was on fire yesterday was the metal space. We had good data coming out of China, and that's what spurred the metal index to the high point of the day. And you have the dollar index as well that cooled down a little bit. Amit Dixit, analyst at ICICI Securities, joins us to give us his view on the sector. Well, morning, Amit. Thanks so much for joining in. You know, when my team told me that you're joining, I was surprised because you were on paternity leave. But congratulations first on becoming a father again. And appreciate you joining in as you come back. But let's talk about the metal space. There have been price increases, I understand, and reports suggest that prices have been increased in March yet again. So on steel prices itself, could you tell us what are your channel checks indicating on price increases? And post this price increase, what's the differential between domestic prices and imported steel?
Great. Thanks, Nigel, for your wishes, and good morning, everyone. So, if you look at steel prices, my channel checks indicate that the increase could be to the tune of 1,000 to 1,200 rupees per ton for HRC. For rebars, we still haven't seen an increase. However, the fact remains that there are also indications that NMDC might increase its prices by close to 200 to 250 rupees, and that are our channel checks want to suggest. Now, talking about import parity, given the fact that Chinese export price has gone up above $700 a ton, and Far East prices are also hovering around the same range, we still are in a very comfortable range, to be honest. So, we are still at our domestic prices are at a discount to the landed price of import from China, and they are running almost at par with the Far East imports, the landed price that is. So clearly, we don't see any threat of imports. On the export side, on the other hand, there is a positive news. We see that exports are running to the tune of 0.75 million tons per month. Which is like they were kind of zero point 0.3, they tapered off to 0.3 in the export duty regime. So they are springing back, and that gives our steel companies an optionality to sell in domestic market or in export market. Last thing that one has to keep cognizance of is that the differential between export prices and domestic prices has narrowed down to a very large extent. From 20% discount, the export prices are running at around 2% discount to the domestic prices. So clearly, domestic companies are indifferent to selling either in domestic market or export. So that's a win-win situation for the domestic steel companies, at least at this point in time.
Okay, so win-win situation for domestic steel companies. Amit, I have to ask you about Vedanta because it's back in the limelight for the wrong reasons, perhaps. I mean, that high debt of almost $12 billion is something that's, keeping investors on tenterhooks. But tell me, on the stock itself, what's your view?
Sonia, I have to apologize here. Vedanta is in restricted list for us, unfortunately, so can't give my views.
Okay. What about the other non-ferrous stocks? What's your preference between ferrous and non-ferrous?
Yeah, so we at this stage we prefer ferrous. The reason being that we believe that the spreads in steel are bottoming out, and given the fact that, as you mentioned in the beginning, that the China factory data is good, and there is going to be this 2 sessions meeting in next week, we do expect some policy support. And given that the initial indicators, the lead indicators that we see of real estate, they are settling. So clearly, and the fact that April to June is peak in terms of real estate in China. So from that perspective, we really see that, the spreads are likely to bottom out. So therefore, ferrous remains our preference, relatively speaking. Although in the ferrous sector, we are picking and choosing few stocks, but still ferrous remains relatively preferred bet at this point in time. In non-ferrous, Nalco remains our key pick. Yeah.
Right. Amit, this is not so much a question about fundamentals, which you've outlined very nicely, but what matters more for stocks? Dollar rising is generally perceived to be negative for stocks. On the other hand, you've got this China reopening and coming back strongly. What matters more at this stage to these stocks where they are? Your opinion?
Well, it's the interplay of both the factors. You put it rightly. The dollar index weakening has been good for the stocks, but I think all eyes are on how China opens actually. And as I mentioned during my last interaction, also that one has to take it with a pinch of salt. One has to be really patient about it. But as I mentioned, that now we see that there is some semblance of hope, at least, there is a glimmer of hope. And we see that that 2 sessions, particularly, I think next week, that would be very, very critical. And given the fact that Chinese officials have said that they would focus on growth, if they are able to do it with some policy support, how much and how long? These are the critical factors, because of late we have seen China to be very, very peevish about the inflation. So how long and how much? These are the key questions that we would like to seek answers to.
Okay, finally on NMDC, I wanted your thoughts. What is the long-term strategy there?
No, so NMDC, well, we saw the volume data yesterday. Again, if you look at the volumes on YOY basis, they are a little bit down, but we see the trajectory being right. And the fact that for NMDC, global prices matter a lot. The stock movement is totally correlated to the global iron ore prices. And we do expect global iron ore prices to go up from here, at least for the next 3 months. So NMDC, I think we have a target price of 130 rupees. And we believe that the stock is well set for that kind of return if somebody is interested.
Okay, Amit, we leave it at that.